please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. India is a long-term destination for foreign investors. The rupee volatility and crude shocks are mere blips on the radar that will not drive away capital, says investment giant Fairfax's founder and CEO Prem Watsa. In an exclusive conversation with CNBC TV18's Nithya, Balakrishnan, Watsa added that Fairfax's $5 billion India bet will only increase given India's policy to enable ease of doing business.
The main reason, I think, is just as you saw here with Invest India, a presentation by Deepak Bagla, that India is becoming business friendly in a huge way with this new government, with Mr. Modi, and the rankings have gone from 142 to 100. Transformational, unprecedented, never happened before, that type of movement. And so I think business ultimately provides employment. So you get freedom. We've had in India, I left India at the age of 22, 46 years ago. And so India didn't have economic freedom for the individual. Now India's opening up so that we have economic freedom. You can do whatever you want. I can do whatever I want. I can buy land. I can buy this. I don't have a lot of bureaucracy restricting me. Start a business like in a day, right? So that's what's happened. That's the transformation that's taken place in India. And it's taken place under this government, and it's corruption's been eliminated right at the top. And I gave it a credit to Mr. Modi. I just think Mr. Modi's done a fantastic job.
Mr. Watsa, if I would ask you a couple of sectors that you believe in India which will grow better than the others, what would they be?
No, we don't go by sectors.
Sure.
We go by good people, honest people with a track record who want to build a company, who want to serve their customers. So you serve your customers, look after the people who look after the customers, make a return for your shareholders, and then put money back into the system.
What's the kind of investment that you at Fairfax have currently in India, and what is the outlook on that?
All very good, but we own the Bangalore International Airport. We have a big 35% interest in IIFL. We have NCML, which is a grain storage company that we're bringing into, and on and on and on. Very, very happy with all of the investments, and they all have huge
quantum and headcount that you have.
Yeah, so we've invested about $5 billion, and we employ, particularly through Quest, which is a services company, 300,000 people.
And that's set to grow?
Set to grow significantly. Especially after this conference. I'm so inspired.
One final question before I let you go. It's tough economic conditions, market conditions, given currency volatility as well as crude surging. Given that, do you think long-term investment in India could be impacted in the near term, or do you think this is just a blip in the radar?
This is just a blip. Yeah? Just a blip. You won't even notice. You won't even talk about it in a few years.
Global investors are not too concerned?
No, I think global investors should look right through that. This is like an unprecedented opportunity facing the Indian people and facing investors in India.
Okay, well, moving on then, more bankers, including lead banker State Bank of India, are looking to sell their loans in SR Steel to asset reconstruction companies rather than wait endlessly for the NCLT process, which in SR Steel's case has already dragged on for 15 months. Bankers close to the issue told CNBC TV18 that bankers' appetite has been whetted by the fact that recently HDFC sold its 1,000 crore rupee exposure to Edelweiss at only a 30% haircut. Lata has more.
That's right. We are given to understand that banks, including SBI and primarily SBI, are looking to sell their loans, their exposure to SR Steel, to ARCs, that is asset reconstruction companies, rather than wait through the entire NCLT process. As the bankers see it, at the moment, HDFC just a few days ago walked away with just a 30% haircut, got 70% of its exposure of 1,000 crore from Edelweiss ARC. And therefore, rather than wait for this NCLT process, which could well take another year because it's NCLAT, and then if the two parties challenge the decision in the Supreme Court, things can really get very delayed for the banks. So looking at just a 30% haircut seems very attractive to them at this point in time. SBI, we believe, is even looking at inviting bids from ARCs. We have written to SBI. We haven't yet got any reply. But sources who are very close to the issue confirmed to us that SBI is seriously pondering selling off its loan. And remember, recently even BOB sold its loan with walking away with a 70% recovery. And 70% recovery of the total claims actually amount to 90% of the book value of a bank's loan. You must remember that there are rival claims. The New Metal and Arcelor battle has been on for now almost 15 months. Essar Steel was first registered in the NCLT in June of 2017, and then of course the case has come up. There were 2 rounds of bidding, and then it's come up before NCLAT with both New Metal and Arcelor claiming that the other is ineligible for various reasons because they have NPAs and related party and stuff like that. The New Metal bid we know is 37,000 crore out of total claims which the RP has admitted of 50,000 crore. So if through the NCLT you're only going to get 37,000 crore, you might as well go for a 30% haircut and sell to ARC seems to be the thinking. So things may get wrapped up in Essar Steel in a very different fashion, it looks like. It looks like the ARCs will be battling it in the NCLT and not the banks.
All right, ARCs will be battling it in the NCLT and not the banks. Thanks a lot for that, Lata. With that, the countdown to the US-India 2+2 dialogue ahead is on. In fact, ahead of this mega event, the President of Defence and Aerospace at Tata Sons, Banmali Agarwala, has said that an important beneficiary of the 2+2 dialogue will be business-to-business relations. In an exclusive conversation with CNBC TV18's Kritika Saxena, Banmali Agarwala added that these talks are expected to specially benefit the defence sector. Listen in.
When you talk about defence, you have to take a long-term approach. We've been at this now, particularly in the field of aerospace, for the last almost 10 years. And I think the kind of approach we adopted was, let's first get plugged into the global supply chain. Okay. Because what is the capability or competence that we get onto the table for somebody from outside to want to partner with us? We developed that capability in partnership with some of the real majors out there, people such as Boeing, like Lockheed Martin, like Sikorsky, like Honeywell, like GE, and so on. And I think over time, we've now got to a stage where we are single source suppliers for many of their global products. We are critical suppliers for many of the global products, and I think we've established our credibility that we have the ability and the wherewithal to kind of fit into into the global scheme of things. Now, as and when the Indian opportunity kind of opens up, again, particularly in the context of aerospace, I think we are more than well positioned because we have that know-how, the skill set, and the temperament to actually go for it and really get down to the point of actually producing full aircrafts, because we're already doing a large piece of it. We're making structures, we're doing components, we are supplying engine components. It's just a question of putting it all together, and I think that is something that we certainly will be able to do.
Mr. Karal, how do you see the strategic partnership model that India has introduced so far? Are companies wary of India's offset policy?
Well, I think this will evolve, and I think we know that the offset policy will need some amount of tweaking from the defense, from the Ministry of Defense, could be better, let me put it that way. That will also help the industry to plan its investments better. Today it is a little difficult to make investments ahead of or in anticipation of demand because you just don't know when will that demand come. It is also a fact that we will need to build capability, which is not going to happen overnight. It will not happen after you receive the order. It has to be done in anticipation.
Okay, time for a break now, but up next we'll bring you an excerpt of an exclusive conversation with Schneider Electric CEO Jean-Paul Pascal Tricure. Largest market for Schneider, and that accounts for almost 1 billion euros in revenues. Here's a snippet of that exclusive conversation with the chairman and CEO of Schneider Electric.
We take a long view on India. India has a tremendous potential for what we do, which is energy management and automation. We bring to our customers bundles of energy and digital solutions because energy is a source of life and progress, and digital is a source of efficiency. And India is offering a lot of possibilities in this domain. Industry is growing, and this is a business of course, we serve. The IT industry is building data centers, and Schneider is the world leader in supplying energy infrastructure to data centers. And then urbanization is really developing very fast, especially around smart cities. And this is also one of the core spots of Schneider. So we see a continuous and accelerating development of our presence in India.
Okay, speaking of the accelerated presence in India, what about capacity expansion? If I look at your numbers, today you have about 24 factories and 29 distribution centers, which act as your export hubs as well. So given the domestic demand as well as your export outlook, what kind of capacity expansion plans do you have in mind?
Well, first you have to realize that India has been the place of the most investment of Schneider in the world in the past 10 years. Our development has been fast. It has been mostly greenfield, building by ourselves factories, R&D centers. So today we keep expanding our capacity in India. 1/3 of what we do in India is exporting. We've been one of the first global companies really leveraging India as a major base for product and technology export. And we intend to keep developing our business in India by growing this presence that we have here as a strong industrial place with a global vocation, a strong R&D place, and we have already 1,500 people in R&D in India.
Okay, you've talked about the India opportunity, 1,500 people currently in India, and this has largely been organic growth, but you're now also looking at inorganic growth. What is the latest on the proposed L&T acquisition? You've tied up with Temasek for that. Have you been given the CCI approval? What is the latest on that front?
So, well, we announced at the beginning of May this year that we would be merging our Schneider India operation together with Larsen & Toubro operation, doing similar, not similar, but same families of products in the field of electrical. The project that we build together here is to build a strong Indian champion that will not only serve the Indian market on all the subjects of energy transition to a cleaner energy, but also serving the export and with a major, by the way, major project for development of export in direction of East Asia, in direction of Africa, Middle East, on the rest of the world. So this project has been announced at the beginning of May. We are in the process of going through all the necessary approvals. You mentioned the CCI. Those processes are going on. There is no news here. The teams are working hard to make sure that this beautiful project, ambitious project, is going to completion.
All right, with that, super specialty hospitals in and around Delhi will soon feel the heat as the Competition Commission of India has ordered a wider probe into the allegations of unfair pricing of drugs and medical supplies. The Commission has said that after initial investigations, it noted that huge profits are being earned by sale of products to inpatients. Therefore, the watchdog will now widen the scope of its investigation to focus on products sold to inpatients that may not be required on an urgent basis.
Okay, well, moving on now, and a big relief for the construction sector in the states of Maharashtra and Uttarakhand. The Supreme Court has lifted the ban on construction activity in these two states. Remember, the Apex Court had barred construction in 3 states, including Maharashtra, Uttarakhand and Madhya Pradesh, for the non-implementation of a solid waste management plan. The court has modified its order after Maharashtra and Uttarakhand governments submitted policies for solid waste management.
A historic day ahead for the LGBTQ+ community in India as the Supreme Court is set to rule on the constitutional validity of the Section 377 of the Indian Penal Code. Section 377 is a colonial-era law that criminalizes private consensual sexual acts between same-sex adults. The Apex Court had reserved its judgment in July, adding it would strike down the law if it is convinced that the law violates fundamental rights. The centre remained neutral and left the decision to the wisdom of the court. During the hearings, the Chief Justice Deepak Mishra said the court would not go by majoritarian morality in this case.
Time for a break now. But up next, we'll get you a check on the cues and news to watch out for in the F&O space.
Welcome back. Adani Enterprises will be the stock in focus as it goes its ex-gas business today. Sonal is here with the highlights. Sonal, what is the value that the street is ascribing to the gas business?
Well, you know, Mangalam, IDFC is one brokerage which is ascribing around 50 rupees per share. That is the value it's giving to the gas business. But I've done some calculations on my own and I'll let you go through it. So basically, the ex-date is today. So yesterday, if you held one share of Adani Enterprises, you will be given one share of Adani Gas. And in terms of revenues, Adani Gas did revenues of around 1,450 crores in FY18. And we'll be comparing it with the other city gas distribution companies, that is Mahanagar Gas, Indraprastha Gas and Gujarat Gas. So if we go through those details, the revenues for this company were the lowest in comparison to the other three companies, but that is because it has the lowest number of CNG stations and also the volumes that it is doing is comparatively lower. But if we talk about the margins that this company is making, it is largely in line with the other companies. MGL actually tops the list in terms of city gas distribution companies' margins, that is at 35%, and Adani Gas is able to make margins of around 25%. All of it giving the EBITDA per SCM, that is one of the main internals that we track, at around 7.8 rupees per SCM. So that is one thing that we are looking out for. The other thing is the debt of the company, that is around 348 crore rupees. That compares with Gujarat Gas's debt of around 2200 crore rupees, and there is no debt in the books of MGL and IGL. So that is one thing we are looking out for, because the company is undertaking a lot of capital expenditure because it is expanding in other cities, and already it has won around 18 areas in the recent CGD bids. That was through JV, and 13 it has won individually. Now, if I talk about the valuations, the average sector valuation is at around 21 times FY20 EPS. So if we go by that, the value will come around 36 rupees to 38 rupees per share for this business. So let's see what kind of adjustment is made in the share price of Adani Enterprises today.
Okay, all right, Sonal, thanks very much for that. Well, let's move on now. Manisha Gupta joins in with an update on all what she's tracking in the commodity and the currency space. Manisha, over to you.
Well, thank you so much for that. It is the US dollar that we have seen decline a bit, and that really seems to be impacting the commodity markets there. But the crude oil prices, that is what you need to keep an eye on. The emerging market woes is weighing on to the crude oil prices. We've seen a second straight day of decline coming in here. The deadline nears for a potential new round of US tariffs on 200 billion worth of Chinese goods, and that would mean slowdown in global demand growth, and that's what the markets really are keeping an eye on. In the meanwhile, the latest reports also show that the OPEC supply is increasing. There also is a statement from OPEC saying that the global demand will breach 100 million barrels on the higher side. That is a statement that seems to be supporting the crude oil prices right now. But apart from that, it really would be the U.S. weekly inventory data that comes in today, where the markets are anticipating a decline in U.S. inventories, and that would be yet another bullish factor to watch out for. So I think the kind of decline that we already have seen in the New York session yesterday, you could see some build-up in long positions in crude going forward from here in the day zone today. The strength also has been seen in case of the metal prices because of the decline in US dollar. So you have the gold prices back above $1,200 per ounce, and the metal space, copper prices also are trading on a firmer note in Shanghai as of now.
All right, Manisha, thanks a lot for that. Brent at 77, at least for today, should be good news for the Indian equity market holders. But watch out for the cues that are coming in from the F&O space, because with the Brent at 77, the SGX Nifty indicating a positive start, the cues are quite negative. So if there is no follow-through, then there could be a case for short covering. The FIIs, they sold about 2,300 crores in index futures, the largest this series. In fact, in yesterday's session, the volumes in F&O were as much as they were in all the 3 days of the series so far put together. The FIIs added 31,350 shorts in index futures in one day itself, and that is more than all the other days combined. In fact, since the start of this series, 4 sessions this series we've had, the FIIs have added 9,000 longs in index futures, but that compares with about 58,000 shorts that they've added in index futures itself. And at the start of the series, the FIIs was 64% long, and now that has fallen to 51%. So even Stevens, a lot of shorts have been added in the first 4 days of the September series. On the downside, we've seen a lot of protection buying, so 30,000, 17,000, 29,000. Yesterday, 45,000 put contracts were bought on the long side by the FIIs. Of course, a large part of that data is also exaggerated because of the fact that it's Nifty Bank weekly options expiry. But suffice to say, over the last 4 sessions, the FIIs have bought 1.2 lakh puts. This compares with 45,000 calls that they've bought. Add to that, they've also written 50,000 short calls. So that's telling you maybe the upside is a bit of a hurdle. The Nifty put call ratio has fallen from peak levels of around 2 to 1.37. 11,400 is the mark we will be watching out for. 11,500 call saw a lot of writing yesterday.
Okay, all right, Mangalam. Thanks very much for that. On that note, we're going to wrap up this edition of Breakfast. Bazaar Morning Call comes up next.